And from housing affordability to credit card debt, we are less than 9 hours from the start of President Trump's deadline for a 10% cap on credit card interest rates. We have to be very clear here. There is currently no law in place that would actually impose a federal cap on credit card issuers, and any move to do so would likely require Congress to pass legislation for the cap to be legally enforced. However, just on the idea, bank stocks and card issuers immediately got hammered on the announcement. Visa, which of course is a payment, it's not really a credit card issuer, but they are a payment counter here, down 6.75%. MasterCard down 7%. American Express down 4.75%. You had JP Morgan down 5%. Citi, Capital One, everybody getting hammered. They don't like it. But one buy now, pay later CEO whose company issues a credit card says the banks may hate the idea, but he gives it a thumbs up. Let's find out why. Joining me now in a Fox Business exclusive, Klarna CEO and co-founder Sebastian Siemiatkowski. The Klarna credit card has no annual or monthly fees, at least in the beginning. Sebastian, you're backing President Trump's idea for the credit card interest rate cap. Tell me why. What do you like about it?
Look, it's very simple. I've worked in banking now for 20 years. I've seen it all. And the truth is, revolving credit card interest is nothing but an extraction machine. And I think that President Trump is super wise and willing to take on the banks on behalf of the U.S. consumers. I mean, you have to just think about the facts that like $160 billion in interest charges last year, 31 billion American pays in these fees. That isn't a financial service industry. It is an extraction machine. So it is not necessary to charge so high interest rates. It's a broken system. And, you know, capitalism is great, but sometimes, you know, but anarchy is not, right? So sometimes reining things in with requirements like this can be healthy for an industry that's lost its direction.
The major banks immediately started saying, oh, this would be terrible for credit. It would limit and it would clip credit away from the very people who need it the most, the lower income people. This is a horrible idea. People need to understand how many billions of dollars the big banks make when people miss their payments and have to pay anywhere from 15 to 28%, sometimes even higher in fees. I mean, of course the banks are going to be against this. But tell me why you feel that this is something that really should be imposed, and are you worried at all about any sort of unintended consequences?
Well, I have the benefit that I've been working both in the US and in Europe. And in some European markets, there are interest rate caps. There are interchange fee regulation. Right. And it has not led, just like Trump highlights, it has not led to these consequences that the banks are now trying to scaremonger with. The truth is that, you know, the whole revolving credit card system is based on the idea that you put all of your spending, both groceries, whatever it is, your whole monthly spending, and then they encourage you to borrow, and you end up having a balance of $5,000 and paying, to your point, up to 30% interest. It used to be that it worked like Klarna does, where you would press 1 for debit and 2 for credit, and you would only take single transactions and put them on installments rather than revolving, which is a much better and healthier concept. In a US, a credit card transaction costs society $5, 2.5% in merchant fees, 2.5% in additional fees generated from revolving. Klarna is willing to live on just 2.5 of those, so half of that, and make money. And we see consumers preferring that. 20% of US consumers are self-aware avoiders. They are tired of these tricks that the credit cards have been pulling on them. And they are looking for healthier alternatives where use debit for your day-to-day purchase, occasionally use credit, preferably installment-based and with a fixed payback time, not revolving eternally.
I do want our viewers to really understand, though, because with every credit card, there is that fine print. With yours, which is the Visa-branded card, again, no annual or monthly fees, pay in 4 interest rate-free in payments via app, pay in full at billing date, you can earn cash back. However, if you opt for the pay over time, so extending it to 18 months, then you pay an interest of between 21 to 29%. Just so that we're clear on that. That said, I think that in a way you're right by using the European version, or at least the example. You know, you had Vanderbilt University put out a study. I found this really interesting. Last year, they found that a 10% cap, this is before President Trump issued this, a 10% cap on credit card interest rates could save we're now computers, aren't we? Consumers $100 billion per year. How much a revenue bust would this cap be to the big banks?
But I would add to that also, the Fed's own data shows that credit cards is probably the most effective wealth redistribution mechanics ever created in society. And I think that is, again, Trump speaking to being here for everyone in the US. And the truth is that because merchant fees and credit card fees are so high, grocers and retailers have to charge higher fees on average, even for people paying cash. And that means that you're redistributing. Subprime consumers and people with lower incomes lose $55 on average in the US every year, and people with high FICO gain through loyalty points and rewards $200 a year. That's $15 billion being redistributed. That is not a great system for society, and it's an unfair system.
My point exactly. The banks will bellyache about this stuff. Oh, it's going to be horrible. Well, of course, for them. I mean, but it's almost a rounding error in some cases for them. Sebastian, good to see you. Great to have you on.